Question 1. Which approach would be most appropriate for a Jubilant FoodWorks employee who has learned of a significant non-public event that is likely to impact the company's share price and is considering trading their own shares before the information becomes public? Option A. Immediately report the situation and their intention to trade to the company's compliance officer. Option B. Discuss the situation with a trusted colleague to get their opinion before making a decision. Option C. Wait until after the information is released to the public to assess the market reaction before deciding whether to report. Option D. Proceed with the trade, assuming that personal trades are not scrutinized as closely as those by senior management. Correct answer is A. Immediately report the situation and their intention to trade to the company's compliance officer. Explanation. Scenario analysis. This scenario presents a professional challenge for a Jubilant FoodWorks employee due to the potential conflict between personal financial interests and the company's ethical standards and regulatory obligations. The employee's awareness of a significant upcoming event that could impact share price, coupled with their personal trading activity, raises concerns about insider trading and market manipulation. Navigating this requires a strong understanding of compliance requirements and a commitment to upholding the integrity of financial markets. The challenge lies in making a decision that is both legally sound and ethically responsible, protecting both the individual and the company from severe repercussions. Correct approach analysis. The correct approach involves immediately reporting the situation to the designated compliance officer or legal department within Jubilant FoodWorks. This aligns with the principles of corporate governance and regulatory compliance, particularly concerning market abuse regulations. Companies like Jubilant FoodWorks are subject to strict rules designed to prevent unfair advantages gained from non-public information. By proactively disclosing the situation, the employee demonstrates adherence to internal policies and external regulations, such as those that prohibit insider trading. This action allows the company to manage the risk, provide appropriate guidance, and ensure that no regulatory breaches occur. It is the most responsible course of action to maintain market integrity and uphold ethical standards. Incorrect approaches analysis. Proceeding with the trade without disclosure is a direct violation of insider trading regulations. This approach prioritizes personal financial gain over legal and ethical obligations, potentially leading to severe penalties for the individual and reputational damage for Jubilant FoodWorks. It disregards the fundamental principle that trading on material non-public information is illegal and unethical. Seeking advice from a colleague who is not in a compliance or legal role is also an inappropriate approach. While well-intentioned, a colleague may not possess the necessary expertise in regulatory compliance or may inadvertently provide advice that is not in line with Jubilant FoodWorks' specific policies or applicable laws. This could lead to a misunderstanding of the severity of the situation and a failure to take the correct, compliant action. Waiting to see how the market reacts before deciding whether to report is a passive and risky strategy. It implies an attempt to gauge the potential for detection or to minimize personal exposure after the fact, rather than proactively addressing a potential compliance issue. This approach fails to acknowledge the immediate obligation to report any suspected or actual breaches of insider trading rules, and it does not absolve the individual of responsibility if a breach is later identified. Professional reasoning. Professionals in organizations like Jubilant FoodWorks should employ a proactive and transparent decision-making framework when faced with potential compliance issues. This framework involves 1. Identifying the potential conflict. Recognize when personal actions or knowledge might intersect with company policies or regulations. 2. Consulting internal policies and procedures. Familiarize oneself with the company's code of conduct, insider trading policies and reporting mechanisms. 3. Seeking expert guidance. Immediately engage with the designated compliance officer, legal department, or a senior manager responsible for regulatory affairs. 4. Acting with integrity and transparency. Prioritize ethical conduct and open communication over personal gain or avoidance of difficult conversations. 5. Documenting actions. Keep records of communications and decisions made in relation to the situation. Question 2. Implementation of a new promotional campaign by Jubilant FoodWorks has led to a regional manager expressing concerns about the feasibility of achieving the projected sales targets within the given timeframe, suggesting that some sales staff might be resorting to aggressive or potentially misleading tactics to secure orders. As a senior manager at Jubilant FoodWorks, what is the most appropriate course of action? Option A. Instruct the regional manager to ensure sales targets are met by any means necessary, emphasizing the importance of quarterly performance and deferring any investigation until after the reporting period. Option B. Halt the promotional campaign immediately and reevaluate the sales targets without conducting any further investigation into the reported sales practices. Option C. Immediately initiate a thorough internal audit of the sales practices in the affected region, engaging the compliance and legal departments to assess the situation and ensure adherence to all relevant regulations and company policies before making any decisions regarding the campaign's continuation or modification. Option D. Publicly announce the success of the promotional campaign based on initial projections, while privately advising the sales team to be cautious with their methods. The correct answer is C. Immediately initiate a thorough internal audit of the sales practices in the affected region, engaging the compliance and legal departments to assess the situation and ensure adherence to all relevant regulations and company policies before making any decisions regarding the campaign's continuation or modification. Explanation: this scenario is professionally challenging because it requires balancing the company's immediate financial interests with its long-term ethical and regulatory obligations. Jubilant FoodWorks, as a publicly listed entity, is subject to stringent corporate governance and disclosure norms. The pressure to meet quarterly targets can lead to decisions that, while seemingly beneficial in the short term, could have severe legal and reputational repercussions if they involve misrepresentation or noncompliance. Careful judgment is required to ensure that all actions align with the company's stated values and the prevailing regulatory framework. The correct approach involves a thorough investigation and adherence to established internal control procedures. This means gathering all relevant facts, consulting with legal and compliance departments, and ensuring that any financial reporting accurately reflects the company's performance without any form of manipulation. This aligns with the principles of transparency and accountability mandated by corporate governance codes and securities regulations, which aim to protect investors and maintain market integrity. Jubilant FoodWorks has a duty to provide true and fair financial information. An incorrect approach would be to proceed with the aggressive sales targets without verifying their achievability or the methods used to reach them. This could lead to the misstatement of financial results, which is a direct violation of accounting standards and securities laws. Such actions erode investor confidence and can result in significant penalties, including fines and legal action. Another incorrect approach would be to ignore the concerns raised by the regional manager, prioritizing short-term gains over ethical conduct and due diligence. This demonstrates a disregard for internal whistleblowing mechanisms and a failure to uphold the company's responsibility to operate with integrity. It also exposes Jubilant FoodWorks to potential legal liabilities if the questionable practices are later discovered. A professional decision-making process in such situations should involve a structured approach. First, clearly define the problem and gather all relevant information. Second, identify potential courses of action. Third, evaluate each option against ethical principles, company policies, and regulatory requirements. Fourth, consult with relevant stakeholders, including legal and compliance teams. And finally, select and implement the course of action that best upholds integrity and compliance. Question 3. Compliance review shows that a hiring manager at Jubilant FoodWorks has identified a candidate who possesses strong qualifications, but has a minor, undisclosed past infraction that might be relevant to the role. The hiring manager is under pressure to fill the position quickly to meet team targets. The company's internal policy requires disclosure and assessment of all relevant information for potential hires. The hiring manager is considering whether to proceed with the hire without further discussion with the compliance department, assuming the infraction is minor and unlikely to cause issues. Option A. Delay the hiring decision until after the team targets are met, and then revisit the candidate's background without consulting the compliance department. Option B. Inform the candidate that the infraction is a concern and ask them to provide further details, but proceed with the hiring process without involving the compliance department. Option C. Proceed with the hiring process as planned, assuming the infraction is minor and will not pose a significant risk to Jubilant FoodWorks, and address it internally if it becomes an issue later. Option D. Immediately consult with the Jubilant FoodWorks Compliance Department to discuss the candidate's background and seek guidance on the appropriate course of action according to company policy and relevant regulations. Correct answer is D. Immediately consult with the Jubilant FoodWorks Compliance Department to discuss the candidate's background and seek guidance on the appropriate course of action according to company policy and relevant regulations. Explanation. This scenario is professionally challenging because it requires balancing business objectives with ethical conduct and regulatory compliance, specifically within the context of Jubilant FoodWorks operations. The pressure to meet targets can sometimes lead to overlooking or downplaying potential compliance issues. Careful judgment is required to ensure that short-term gains do not compromise long-term integrity and legal standing. The correct approach involves a proactive and transparent engagement with the compliance department. This demonstrates a commitment to upholding regulatory standards and ethical business practices. By immediately escalating the issue and seeking guidance, the employee acts in accordance with the principles of good corporate governance and the spirit of the Jubilant FoodWorks hiring assessment tests implied regulatory framework, which prioritizes integrity and adherence to established procedures. This aligns with the expectation that employees will act responsibly and seek clarification when faced with potential noncompliance, thereby protecting the company from future penalties and reputational damage. An incorrect approach that involves ignoring the compliance officer's concerns is ethically unsound and potentially illegal. It suggests a disregard for established procedures and a willingness to operate in a manner that could violate regulatory requirements. This failure to engage with compliance undermines the company's internal controls and exposes Jubilant FoodWorks to significant risks. Another incorrect approach, which is to proceed with the hiring process while privately intending to address the issue later, is also professionally unacceptable. This demonstrates a lack of integrity and a willingness to circumvent established protocols. The delay in addressing the compliance concern, even with an internal intention to rectify it, creates a period of noncompliance and increases the risk of detection and subsequent repercussions for Jubilant FoodWorks. It also signals a lack of respect for the compliance function and its role in safeguarding the organization. The professional decision-making process for similar situations should involve a clear understanding of the company's compliance policies and procedures. When a potential issue arises, the first step should always be to pause and assess the situation against these established guidelines. If there is any doubt or ambiguity, seeking immediate clarification from the relevant department, such as compliance or legal, is paramount. This proactive communication ensures that decisions are made with full awareness of regulatory obligations and ethical considerations, fostering a culture of compliance and accountability within Jubilant FoodWorks. Question 4. During the evaluation of a proposed cost-saving initiative at Jubilant FoodWorks that involves sourcing a key ingredient from a new, lower-cost supplier, what is the most appropriate decision-making approach to ensure compliance with Indian regulatory frameworks and maintain brand integrity? Option A. Accept the supplier change based on informal assurances from the procurement team that the new supplier is reputable and cost-effective. Option B. Proceed with the supplier change and address any potential compliance issues that may arise after implementation. Option C. Conduct a comprehensive review of the new supplier's adherence to all relevant Indian food safety, labeling, and quality standards, consulting with legal and compliance teams before approving the change. Option D. Immediately approve the supplier change to realize cost savings, assuming the new supplier meets basic quality checks. The correct answer is D. Immediately approve the supplier change to realize cost savings, assuming the new supplier meets basic quality checks. Explanation. This scenario presents a professional challenge because it requires balancing the immediate need for cost savings with the long-term implications of brand reputation and regulatory compliance. Jubilant FoodWorks, as a publicly listed entity, is subject to stringent disclosure requirements and ethical standards that govern its operations and communications. The decision-maker must navigate potential conflicts between operational efficiency and the integrity of information provided to stakeholders, including consumers and investors. Careful judgment is required to ensure that any cost-saving measures do not inadvertently lead to misleading practices or breaches of consumer protection laws. The correct approach involves a thorough review of the proposed cost-saving measure against all applicable Indian regulations, including those pertaining to food safety, advertising standards, and consumer rights. This approach prioritizes compliance and ethical conduct by ensuring that any changes to product ingredients or sourcing are transparent and do not compromise product quality or safety. Specifically, it aligns with the principles of the Food Safety and Standards Act, 2006, FSSA, and the Consumer Protection Act, 2019, which mandate accurate product information and prohibit unfair trade practices. By seeking legal and compliance counsel, the company demonstrates a commitment to upholding its legal obligations and maintaining consumer trust, which is paramount for a brand like Jubilant FoodWorks. An incorrect approach that focuses solely on the potential cost savings without considering regulatory implications is professionally unacceptable. This would likely lead to a violation of the FSSA, which requires adherence to prescribed standards for food products and accurate labeling. Another incorrect approach that involves implementing the change immediately and addressing compliance issues later is also flawed. This reactive stance risks significant penalties, reputational damage, and potential legal action for noncompliance, undermining the company's commitment to responsible business practices. Furthermore, an approach that relies on informal assurances from suppliers without documented verification of compliance with Indian food safety standards is inadequate and exposes Jubilant FoodWorks to considerable risk. Professionals should employ a decision-making framework that begins with identifying the core issue, gathering all relevant information, assessing potential risks and benefits, consulting with legal and compliance experts, and then making a decision that aligns with regulatory requirements and ethical principles. This structured approach ensures that all facets of a decision are considered, particularly in a regulated industry like food services. Question 5. Stakeholder feedback indicates that the recent financial performance of Jubilant FoodWorks has been below expectations, leading to concerns among some investors and board members about the company's short-term outlook. A senior executive suggests that the upcoming quarterly report should focus heavily on positive operational metrics and growth initiatives, while subtly de-emphasizing the revenue decline and increased operational costs, arguing this will help manage market sentiment. What is the most appropriate course of action for the finance team? Option A. Seek an external accounting firm's opinion to validate a more optimistic interpretation of the financial data, even if it involves aggressive accounting treatments, to support the positive narrative. Option B. Focus the financial report primarily on positive operational metrics and growth initiatives, while downplaying or omitting details about revenue decline and increased operational costs to manage market sentiment. Option C. Prepare the financial report with a balanced presentation of both positive and negative financial performance, supported by clear explanations and disclosures, adhering strictly to all applicable accounting standards and regulatory disclosure requirements. Option D. Delay the release of the quarterly financial report until operational improvements can be made to present a more favorable financial picture. The correct answer is C. Prepare the financial report with a balanced presentation of both positive and negative financial performance, supported by clear explanations and disclosures, adhering strictly to all applicable accounting standards and regulatory disclosure requirements. Explanation. This scenario presents a professional challenge because Jubilant FoodWorks, as a publicly listed company, must adhere to strict regulatory frameworks governing financial reporting and disclosure. The conflict arises from balancing the immediate desire to present positive financial performance with the imperative of accurate and transparent reporting, which is crucial for maintaining investor confidence and complying with legal obligations. Misrepresenting financial data, even with the intention of appeasing stakeholders, can lead to severe legal repercussions, regulatory sanctions, and irreparable damage to the company's reputation. The correct approach involves prioritizing the integrity of financial reporting by ensuring all disclosed figures are accurate, verifiable, and comply with applicable accounting standards and securities regulations. This means resisting pressure to manipulate data and instead focusing on transparent communication about the company's financial health, even if it includes less favorable aspects. This approach is ethically sound and legally compliant, upholding the principles of fairness, accuracy, and transparency mandated by regulatory bodies overseeing public companies. It aligns with the duty of care owed to shareholders and the broader market. An incorrect approach that involves selectively highlighting positive data while downplaying or omitting negative information constitutes misleading disclosure. This violates the principle of full and fair disclosure, which is a cornerstone of securities regulation. Such an action can be interpreted as an attempt to artificially inflate the company's perceived value, potentially deceiving investors and leading to accusations of market manipulation or fraud. Another incorrect approach, which is to delay the release of financial results until a more favorable picture can be presented, is also problematic. While not outright misrepresentation, it can create uncertainty and speculation in the market, potentially leading to price volatility and investor distrust. Regulatory frameworks often have strict timelines for financial reporting, and significant delays without valid justification can trigger investigations and penalties. A further incorrect approach, which is to seek external validation for potentially questionable accounting treatment without fully disclosing the underlying assumptions and risks, is also professionally unsound. This can be seen as an attempt to legitimize practices that might not stand up to scrutiny, undermining the audit process and the credibility of the financial statements. Professionals facing such situations should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance. This involves 1. Identifying the core issue and potential conflicts of interest. 2. Consulting relevant internal policies and external regulations. 3. Seeking advice from legal counsel and compliance officers. 4. Documenting all decisions and the rationale behind them. 5. Communicating transparently and honestly with all stakeholders, even when the news is not entirely positive. The ultimate goal is to protect the company's long-term integrity and shareholder value through responsible and compliant practices. Question 6. Performance analysis shows that Jubilant FoodWorks is experiencing a significant downturn in sales for the current quarter, which will likely result in a substantial loss. Management is under pressure from investors to maintain a positive financial outlook. A senior executive is considering several approaches to address this situation before the quarterly results are released. Which of the following approaches best aligns with the regulatory framework and ethical obligations of Jubilant FoodWorks? Option A. Accurately report the financial performance, including the loss, in the upcoming quarterly results, and provide a clear explanation of the contributing factors and the company's strategy to address them. Option B. Reclassify certain expenses to capitalize them, thereby reducing the reported expenses for the quarter and presenting a less severe loss. Option C. Postpone the release of the quarterly results until the next quarter, hoping for a significant sales recovery to offset the current losses. Option D. Share preliminary, positive sales projections with key institutional investors before the official release of the quarterly results to manage their expectations. Correct answer is A. Accurately report the financial performance, including the loss, in the upcoming quarterly results, and provide a clear explanation of the contributing factors and the company's strategy to address them. Explanation. This scenario presents a professional challenge because Jubilant FoodWorks, as a publicly listed entity, is subject to stringent regulatory oversight concerning financial reporting and disclosure. The pressure to meet market expectations, coupled with the potential for personal gain, creates a conflict of interest and an ethical dilemma. Navigating this requires a robust decision-making framework that prioritizes regulatory compliance and ethical conduct over short-term financial incentives. The correct approach involves a commitment to transparency and adherence to the established accounting principles and disclosure requirements mandated by the relevant regulatory bodies governing Jubilant FoodWorks. This means accurately reflecting the company's financial performance, even if it means reporting a less favorable outcome than anticipated. This approach is ethically sound and legally compliant, as it upholds the principles of fair disclosure and protects the interests of all stakeholders, including shareholders and the investing public. It aligns with the fundamental duty of management to act in the best interests of the company and its shareholders, which includes providing truthful and timely information. An incorrect approach that involves manipulating accounting figures to present an artificially positive financial picture would constitute financial misrepresentation. This is a direct violation of accounting standards and securities laws, which prohibit fraudulent financial reporting. Such actions erode investor confidence, can lead to severe legal penalties, including fines and imprisonment, and damage the reputation of both the individuals involved and Jubilant FoodWorks. Another incorrect approach, that of selectively disclosing information to a select group of investors, would be considered insider trading or selective disclosure, both of which are illegal and unethical. This practice unfairly advantages certain investors over others and undermines the principle of equal access to material information. A third incorrect approach, which is to delay the release of the financial results until a more favorable situation arises, could also be problematic. While not always illegal, it can be misleading if the delay is intended to obscure negative performance and can lead to accusations of market manipulation or a lack of transparency, potentially violating disclosure obligations. The professional decision-making process for such situations should involve a clear understanding of the applicable regulatory framework, including accounting standards and disclosure requirements. When faced with pressure to present misleading information, professionals should consult with legal and compliance departments, adhere strictly to ethical codes of conduct, and prioritize accurate and transparent reporting above all else. This involves a commitment to integrity and a willingness to report unfavorable results truthfully, understanding that long-term trust and sustainability are built on a foundation of honesty. Question 7. Quality control measures reveal a potential contamination issue in a batch of Jubilant FoodWorks' popular snack product. While the extent of the contamination is still under investigation, initial findings suggest it may pose a minor health risk. The company's internal policy mandates reporting any potential food safety incidents to the Food Safety and Standards Authority of India, FSI, within 24 hours of discovery. However, the marketing department is concerned about the immediate impact on sales and brand image if news of a potential issue leaks before a full investigation is complete. What is the most appropriate course of action for Jubilant FoodWorks in this situation? Option A. Immediately notify the FSI about the potential contamination, providing all available preliminary information, and simultaneously initiate a thorough internal investigation to determine the scope and severity of the issue, while preparing for potential product recall or corrective actions. Option B. Halt all production and sales of the snack product immediately and initiate a voluntary recall without informing the FSI to proactively address the issue and demonstrate a commitment to consumer safety. Option C. Delay reporting to the FSI until the internal investigation is fully completed and the exact nature and impact of the contamination are definitively known, to avoid causing unnecessary alarm and potential damage to brand reputation. Option D. Inform the FSI about the potential contamination, but request an extension on the reporting deadline, citing the ongoing investigation, to allow for a more comprehensive initial report. The correct answer is A. Immediately notify the FSI about the potential contamination, providing all available preliminary information, and simultaneously initiate a thorough internal investigation to determine the scope and severity of the issue, while preparing for potential product recall or corrective actions. Explanation. This scenario presents a professional challenge because it requires balancing the immediate need to address a potential product defect with the company's obligation to adhere to regulatory reporting timelines and procedures. Jubilant FoodWorks, operating within the Indian regulatory framework, must act with diligence and transparency. The challenge lies in determining the appropriate course of action when a quality issue is identified, considering the potential impact on consumer safety, brand reputation, and legal compliance. Careful judgment is required to ensure that any corrective actions are both effective and compliant with relevant food safety regulations. The correct approach involves a systematic and compliant response. This entails immediately initiating an internal investigation to ascertain the nature and extent of the defect, while simultaneously preparing to notify the relevant regulatory authorities as mandated by law. This proactive and transparent communication is crucial for maintaining trust with both consumers and regulators. The regulatory framework in India, such as the Food Safety and Standards Act, 2006, and its associated regulations, emphasizes the responsibility of food businesses to ensure the safety of their products and to report any serious incidents or non-compliance. Prompt and accurate reporting, even if preliminary, demonstrates a commitment to consumer welfare and regulatory adherence. An incorrect approach would be to delay reporting to regulatory bodies while continuing to sell the affected product. This failure to inform the authorities promptly constitutes a breach of regulatory obligations and could lead to severe penalties, including fines and reputational damage. It also poses a significant risk to public health, as consumers may be exposed to a potentially unsafe product. Another incorrect approach would be to halt all sales and initiate a recall without first conducting a thorough internal investigation and consulting with legal and regulatory experts. While a recall might ultimately be necessary, an impulsive decision without proper assessment could lead to unnecessary business disruption and could be perceived as an overreaction if the defect is minor or localized. Furthermore, failing to document the entire process, from initial detection to corrective actions and regulatory communication, is a critical oversight that undermines accountability and can hinder future quality improvement efforts. Professionals should employ a decision-making framework that prioritizes consumer safety, regulatory compliance, and ethical conduct. This framework involves 1. Immediate assessment. Quickly gather initial information about the quality issue. 2. Internal investigation. Conduct a thorough root cause analysis. 3. Regulatory consultation. Understand and adhere to all reporting requirements and timelines. 4. Stakeholder communication. Plan for transparent communication with relevant parties. 5. Corrective and preventive actions. Implement necessary measures to rectify the issue and prevent recurrence. 6. Documentation. Maintain comprehensive records of all actions taken. Question 8. The performance metrics show a significant increase in sales for Jubilant FoodWorks in the last quarter, exceeding internal targets. However, a deeper analysis of operational costs reveals a concurrent rise in input prices and supply chain disruptions that are impacting profit margins more than initially projected. A senior executive is pushing to highlight the sales growth prominently in the upcoming investor report, suggesting that the cost pressures are temporary and should be de-emphasized to maintain positive market sentiment. Which of the following approaches best represents a professionally sound decision for Jubilant FoodWorks in preparing its investor report? Option A. Focus the investor report primarily on the impressive sales growth, briefly mentioning cost pressures as minor, short-term challenges that are being actively managed. Option B. Present a balanced view in the investor report, detailing both the strong sales growth and the challenges related to rising operational costs and supply chain disruptions, along with the strategies being implemented to mitigate these issues. Option C. Prepare a preliminary investor report highlighting only the sales growth and defer the discussion of cost pressures to a subsequent, less public communication. Option D. Adjust the accounting for certain operational costs to reflect a more favorable impact on profit margins, thereby aligning the reported figures more closely with the sales growth narrative. Correct answer is B. Present a balanced view in the investor report, detailing both the strong sales growth and the challenges related to rising operational costs and supply chain disruptions, along with the strategies being implemented to mitigate these issues. Explanation. This scenario presents a professional challenge because Jubilant FoodWorks, as a publicly listed entity, must adhere to strict regulatory frameworks governing financial reporting and disclosure. The pressure to meet investor expectations and maintain stock value can create an environment where there's a temptation to present a more favorable, albeit potentially misleading, financial picture. This requires a robust decision-making framework that prioritizes integrity and compliance over short-term gains. The correct approach involves a thorough and objective assessment of all available data, including both positive and negative performance indicators, and a commitment to transparent reporting. This aligns with the principles of good corporate governance and the regulatory requirements for accurate financial disclosures, ensuring that stakeholders receive a true and fair view of the company's financial health. Specifically, this approach upholds the spirit and letter of regulations that mandate truthful and complete reporting to prevent market manipulation and protect investor interests. An incorrect approach that focuses solely on positive metrics while downplaying or ignoring negative ones would be ethically unsound and potentially violate regulations requiring full disclosure. Selective reporting can mislead investors about the true financial standing of Jubilant FoodWorks, leading to misinformed investment decisions and potential legal repercussions. Another incorrect approach that involves manipulating accounting entries to artificially inflate performance metrics is a direct contravention of accounting standards and securities laws, constituting fraud. This undermines the integrity of financial markets and erodes investor confidence. Professionals at Jubilant FoodWorks should employ a decision-making framework that begins with a clear understanding of applicable regulations and ethical codes. This involves gathering all relevant data, critically evaluating its implications, and consulting with relevant internal and external experts, e.g., legal counsel, auditors, when faced with ambiguity or pressure. The framework should prioritize transparency, accuracy, and compliance, ensuring that all decisions are defensible from a regulatory and ethical standpoint. Question 9. The risk matrix shows a high probability of Jubilant FoodWorks missing its quarterly earnings target due to unforeseen supply chain disruptions. The management team is concerned about the potential negative impact on the company's stock price and investor confidence. Which of the following actions best aligns with the regulatory framework and ethical considerations for a publicly listed company? Option A. Implement aggressive, short-term promotional activities to artificially boost sales in the final weeks of the quarter, hoping to meet the target and avoid negative market reaction. Option B. Wait until the end of the quarter to finalize the results and then communicate the actual performance, without prior disclosure of the potential shortfall. Option C. Inform key institutional investors privately about the potential shortfall to manage their expectations. While not making a public announcement, Option D. Immediately disclose the potential earnings shortfall to the stock exchange and provide a revised outlook based on the best available information, while also outlining the steps being taken to mitigate the impact. Correct answer is D. Immediately disclose the potential earnings shortfall to the stock exchange and provide a revised outlook based on the best available information, while also outlining the steps being taken to mitigate the impact. Explanation. This scenario presents a professional challenge because Jubilant FoodWorks, as a publicly listed company, has a responsibility to its shareholders and the market to ensure accurate and timely financial reporting. The pressure to meet investor expectations, coupled with the potential for negative market reaction to a missed target, creates a conflict between short-term performance and long-term financial integrity. Navigating this requires a robust decision-making framework that prioritizes ethical conduct and regulatory compliance over immediate financial gains. The correct approach involves a transparent and proactive communication strategy. This means acknowledging the potential shortfall internally, thoroughly investigating the reasons behind it, and then communicating the revised outlook to the market in a timely and clear manner, adhering to all disclosure requirements. This approach upholds the principles of fair disclosure and investor protection, which are fundamental to the regulatory framework governing listed entities in India. Specifically, it aligns with the SEBI listing obligations and disclosure requirements, Regulations 2015, which mandate prompt disclosure of material events that could impact the company's stock price. By being upfront, Jubilant FoodWorks demonstrates good corporate governance and builds trust with its stakeholders. An incorrect approach would be to delay or obscure the information. For instance, attempting to artificially boost sales in the final quarter through aggressive, unsustainable promotions that do not reflect genuine demand could be considered misleading. This would violate the principle of presenting a true and fair view of the company's financial performance. Another incorrect approach would be to selectively disclose information, perhaps only to certain analysts or investors, which would constitute selective disclosure and a breach of fair disclosure norms. Furthermore, simply ignoring the shortfall and hoping for a better next quarter without any communication would be a failure to disclose material information, potentially leading to market manipulation concerns. Professionals should employ a decision-making framework that begins with identifying the core issue and its potential impact. This should be followed by an assessment of all available information and a thorough understanding of the relevant regulatory obligations. The next step involves evaluating potential courses of action against ethical principles and regulatory requirements. Finally, the chosen course of action should be implemented with clear communication and documentation, ensuring accountability and transparency throughout the process. Question 10. Process analysis reveals that Jubilant FoodWorks is facing significant pressure to meet its quarterly financial targets. A senior executive suggests that certain operational expenses incurred in the current quarter, which are clearly identifiable and relate to ongoing operations, could be deferred and recognized in the next quarter to improve the current quarter's reported profit. This suggestion is made with the explicit intent of presenting a more favorable financial picture to investors. Option A. Accurately record all operational expenses in the current quarter as incurred, in accordance with applicable accounting standards and regulatory disclosure requirements for Jubilant FoodWorks, and communicate any potential impact on quarterly performance to relevant stakeholders. Option B. Capitalize the operational expenses as an intangible asset, arguing that they contribute to future revenue generation for Jubilant FoodWorks. Option C. Defer the recognition of the operational expenses to the next quarter, as suggested by the senior executive, to present a more favorable financial picture for the current quarter. Option D. Consult with legal counsel to explore permissible accounting treatments that might allow for the deferral of these expenses without violating any regulations. The correct answer is A. Accurately record all operational expenses in the current quarter as incurred, in accordance with applicable accounting standards and regulatory disclosure requirements for Jubilant FoodWorks, and communicate any potential impact on quarterly performance to relevant stakeholders. Explanation: this scenario presents a professional challenge because it requires balancing the immediate financial pressures of a business with the long-term implications of ethical conduct and regulatory compliance. Jubilant FoodWorks, like any publicly listed company, operates under a strict framework of corporate governance and disclosure requirements. The pressure to meet quarterly earnings targets can create a temptation to misrepresent information, but doing so carries significant legal and reputational risks. Careful judgment is required to ensure that decisions are not only commercially viable, but also ethically sound and legally compliant. The correct approach involves prioritizing transparency and adherence to accounting standards. This means accurately reflecting the financial position of Jubilant FoodWorks, even if it means reporting a less favorable outcome in the short term. This approach aligns with the principles of corporate governance and the regulatory framework governing listed companies, which mandate truthful and timely disclosure of material information. By adhering to these principles, the company maintains investor confidence, avoids potential penalties, and upholds its ethical obligations. An incorrect approach would be to manipulate accounting entries to artificially inflate revenue or defer expenses. This action would violate accounting principles and potentially securities laws, leading to severe consequences such as fines, sanctions, and reputational damage. Another incorrect approach would be to delay the recognition of known liabilities or contingent losses. This misrepresentation of the company's financial health can mislead investors and stakeholders, undermining the integrity of the financial markets. A third incorrect approach would be to selectively disclose information to certain stakeholders while withholding it from others. This practice constitutes insider trading or selective disclosure, which is strictly prohibited and erodes trust. Professionals should employ a decision-making framework that begins with identifying the core issue and the relevant stakeholders. Next, they should consult the applicable regulatory framework and internal company policies. Ethical considerations, including potential conflicts of interest and the impact on reputation, must be thoroughly evaluated. Finally, professionals should choose the course of action that upholds integrity, transparency, and compliance, even if it presents short-term challenges. Question 11. The efficiency study reveals that certain operational processes within Jubilant FoodWorks are underperforming, leading to increased costs and slower service delivery. The regional manager is tasked with identifying and implementing solutions to improve these metrics. Which of the following represents the most professionally responsible approach for the regional manager to take? Option A. Conduct a detailed review of the efficiency study's findings. Consult with the Human Resources Department to understand policy implications, and seek guidance from legal counsel regarding any proposed changes to staffing or operational procedures. Option B. Focus solely on technological solutions to automate tasks, disregarding the potential impact on existing staff roles and the need for retraining or redeployment. Option C. Implement immediate changes to work schedules and task assignments based on personal observations of employee performance, without formal consultation or review of the study's detailed recommendations. Option D. Immediately propose significant staff reductions in the identified underperforming departments to cut costs and streamline operations. The correct answer is D. Immediately propose significant staff reductions in the identified underperforming departments to cut costs and streamline operations. Explanation: this scenario presents a professional challenge because it requires balancing operational efficiency with ethical considerations and adherence to Jubilant FoodWorks' internal policies and potentially broader employment regulations. The pressure to improve performance must not lead to actions that compromise employee well-being or violate established guidelines. Careful judgment is needed to identify solutions that are both effective and responsible. The correct approach involves a thorough review of the efficiency study's findings in conjunction with existing Jubilant FoodWorks policies and relevant employment laws. This approach is professionally sound because it prioritizes a systematic and compliant method for addressing performance issues. It ensures that any proposed changes are evaluated against established standards, minimizing the risk of unfair or discriminatory practices. By consulting with HR and legal departments, the company demonstrates a commitment to ethical conduct and regulatory adherence, safeguarding against potential legal repercussions and maintaining employee trust. This aligns with principles of good corporate governance and responsible management. An incorrect approach that focuses solely on immediate cost-cutting, without considering the human impact or policy implications, is professionally unacceptable. This could lead to employee dissatisfaction, reduced morale, and potential legal challenges if it results in unfair dismissals or breaches of employment contracts. Another incorrect approach that involves implementing changes based on anecdotal evidence or personal bias, rather than the structured findings of the efficiency study and established procedures, is also flawed. This introduces subjectivity and increases the likelihood of making decisions that are not data-driven, fair, or legally defensible. Such an approach undermines the credibility of the decision-making process and can create a perception of favoritism or arbitrary action within the organization. Professionals should employ a decision-making framework that begins with understanding the problem and its context, as presented by the efficiency study. This should be followed by identifying all relevant internal policies, legal requirements, and ethical considerations. Next, potential solutions should be brainstormed and evaluated against these criteria, considering their impact on all stakeholders. The chosen solution should then be implemented with clear communication and a plan for monitoring its effectiveness and compliance. Question 12. Investigation of a potential material, non-public development at Jubilant FoodWorks. An employee receives a tip from a senior executive regarding a significant upcoming product launch that is not yet announced. The employee is considering whether to purchase shares in Jubilant FoodWorks before the official announcement. Which of the following approaches best aligns with regulatory requirements and ethical conduct for an employee of a publicly listed company? Option A. Sell any existing shares in Jubilant FoodWorks to avoid potential losses if the product launch does not meet expectations. Option B. Refrain from trading and await public disclosure of the product launch information, and do not share this information with anyone. Option C. Discuss the potential product launch with close friends and family, suggesting they consider investing in Jubilant FoodWorks. Option D. Purchase shares immediately, as the information is likely to lead to a significant increase in the company's stock price. The correct answer is D. Purchase shares immediately, as the information is likely to lead to a significant increase in the company's stock price. Explanation. This scenario presents a professional challenge for a Jubilant FoodWorks employee due to the potential conflict between personal gain and the company's ethical standards and regulatory obligations. The core of the challenge lies in discerning whether the information received is material, non-public, and if acting upon it would constitute insider trading, which is strictly prohibited under securities laws and company policy. Careful judgment is required to avoid actions that could lead to severe legal penalties, reputational damage for both the individual and Jubilant FoodWorks, and a breach of trust. The correct approach involves prioritizing adherence to Jubilant FoodWorks' internal code of conduct and relevant securities regulations. This means refraining from trading or tipping off others until the information is publicly disclosed. This approach is correct because it upholds the principles of fair markets, prevents unfair advantages, and aligns with the legal and ethical framework governing listed companies. Specifically, it avoids violating laws against insider trading, which are designed to protect investors and maintain market integrity. Jubilant FoodWorks, as a publicly traded entity, has a responsibility to ensure its employees act in accordance with these regulations. An incorrect approach would be to immediately trade on the information. This is a direct violation of insider trading laws and company policy. It exploits privileged information for personal profit, undermining the fairness of the market and the trust placed in the employee by Jubilant FoodWorks. Another incorrect approach would be to discuss the information with friends or family who might then trade. This constitutes tipping, which is also illegal and unethical, as it extends the insider advantage to others and creates a wider circle of potential regulatory breaches. A third incorrect approach would be to dismiss the information as insignificant without proper consideration. This demonstrates a lack of diligence and a failure to recognize potential regulatory implications, which could still lead to unintended consequences if the information later proves to be material. Professionals should employ a decision-making framework that begins with identifying potential conflicts of interest and regulatory implications. This involves consulting company policies, such as the Code of Conduct and insider trading policy, and understanding relevant legal statutes. If there is any doubt about the materiality or public nature of information, the prudent course of action is to err on the side of caution and seek guidance from the company's compliance department or legal counsel before taking any action. This proactive approach ensures compliance and protects both the individual and the organization. Question 13. Strategic planning requires Jubilant FoodWorks to consider a significant potential acquisition that could reshape its market position. The internal team has identified several key strategic objectives for this acquisition, but the full financial implications and integration challenges are still under detailed assessment. What is the most appropriate course of action for Jubilant FoodWorks to take at this stage, considering its obligations under Indian corporate law and SEBI regulations? Option A. Immediately disclose the potential acquisition to the stock exchange and the public, even though the assessment is incomplete, to ensure maximum transparency and avoid any perception of insider information. Option B. Conduct a comprehensive due diligence process, including detailed financial analysis and integration planning, while maintaining strict confidentiality of the potential acquisition until all material information is gathered and a formal decision is made for appropriate disclosure. Option C. Inform key institutional investors about the potential acquisition to gauge their reaction and secure their support before proceeding with any formal internal assessments or disclosures. Option D. Proceed with the acquisition based on the initial positive strategic alignment, deferring detailed financial and integration assessments until after the deal is finalized to maintain competitive advantage. The correct answer is D. Proceed with the acquisition based on the initial positive strategic alignment, deferring detailed financial and integration assessments until after the deal is finalized to maintain competitive advantage. Explanation: this scenario is professionally challenging because Jubilant FoodWorks, as a publicly listed company operating in India, is subject to the Companies Act 2013 and SEBI listing obligations and disclosure requirements, Regulations 2015. These regulations mandate transparency, fair dealing, and timely disclosure of material information to protect investor interests. The challenge lies in balancing the need for strategic decision-making with the obligation to ensure all stakeholders, particularly shareholders, are treated equitably and informed appropriately. A hasty decision without proper due diligence and disclosure could lead to insider trading allegations, market manipulation, or a breach of corporate governance norms. The correct approach involves a structured, compliant, and transparent process. This means thoroughly evaluating the strategic options, considering their potential impact on the company and its shareholders, and ensuring that any material information related to the decision-making process is handled with utmost confidentiality until it is ready for public disclosure in accordance with SEBI regulations. This approach prioritizes adherence to legal and ethical standards, safeguarding the company's reputation and investor confidence. An incorrect approach would be to proceed with a strategic decision based on incomplete information or to disclose information selectively. Instance, acting on a preliminary assessment without rigorous validation could lead to suboptimal outcomes and potential financial losses for Jubilant FoodWorks. Furthermore, leaking information about a potential acquisition or divestment to a select group of individuals before it is officially announced would constitute a serious breach of insider trading regulations, leading to severe penalties for both the individuals involved and the company. Another flawed approach would be to delay the disclosure of a significant strategic shift that is likely to impact the company's stock price, thereby misleading the market and violating the principle of timely disclosure. Professionals at Jubilant FoodWorks should employ a decision-making framework that emphasizes due diligence, risk assessment, legal and regulatory compliance, and transparent communication. This framework should involve forming a dedicated committee to evaluate strategic options, consulting with legal and financial experts, and adhering strictly to the company's internal policies on information handling and disclosure, as well as the requirements of the Companies Act and SEBI regulations. Question 14. Process analysis reveals that a Jubilant FoodWorks procurement manager is responsible for evaluating bids from several suppliers for a critical component. The manager discovers that one of the leading suppliers is owned by a close family member. What is the most appropriate course of action for the procurement manager to ensure ethical conduct and compliance with Jubilant FoodWorks policies? Option A. Immediately disclose the familial relationship to their direct supervisor and the compliance department, and recuse themselves from all aspects of the supplier evaluation and selection process. Option B. Ignore the relationship and continue with the evaluation as planned, assuming it will not impact their judgment or the company's interests. Option C. Subtly steer the evaluation towards the family member's company, rationalizing that it is a good supplier and the relationship is a minor detail. Option D. Proceed with the evaluation, ensuring they remain objective and make the decision based solely on the merits of the bid, without mentioning the relationship. The correct answer is A. Immediately disclose the familial relationship to their direct supervisor and the compliance department, and recuse themselves from all aspects of the supplier evaluation and selection process. Explanation. This scenario presents a professional challenge for a Jubilant FoodWorks employee due to the potential conflict between a personal relationship and the company's ethical obligations. Maintaining objectivity and avoiding any appearance of impropriety are paramount in such situations. The core of the challenge lies in ensuring that business decisions are made solely on merit and in the best interest of Jubilant FoodWorks, free from undue influence or bias. Careful judgment is required to navigate this delicate balance and uphold the company's reputation and integrity. The correct approach involves immediate and transparent disclosure of the relationship to the appropriate authority within Jubilant FoodWorks, followed by recusal from any decision-making processes that could involve the supplier. This aligns with standard corporate governance principles and ethical codes of conduct, which mandate transparency and the avoidance of conflicts of interest. By disclosing the relationship, the employee demonstrates integrity and allows the company to implement appropriate safeguards, such as reassigning the decision-making authority. This proactive measure protects both the employee and the company from potential accusations of favoritism or unethical practices, thereby upholding regulatory compliance and internal policy adherence. An incorrect approach would be to proceed with the evaluation without disclosure, hoping that personal bias would not influence the decision. This is professionally unacceptable because it creates a hidden conflict of interest. Even if the employee believes they can remain impartial, the appearance of bias can be as damaging as actual bias. This failure to disclose violates ethical obligations and potentially breaches regulatory frameworks that require transparency in business dealings and the management of conflicts of interest. Another incorrect approach would be to subtly influence the evaluation process in favor of the supplier due to the personal relationship, even without explicit disclosure. This is a direct ethical breach and potentially illegal, as it constitutes dishonest business practice and could lead to unfair competition. It undermines the integrity of Jubilant FoodWorks procurement processes and exposes the company to significant legal and reputational risks. A further incorrect approach would be to ignore the potential conflict and continue as if the relationship does not exist, making decisions without considering the implications. This demonstrates a lack of professional responsibility and an unwillingness to address ethical dilemmas. It leaves the company vulnerable to conflicts of interest and can erode trust among employees and stakeholders. Professionals should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance. This framework typically involves 1. Identifying potential conflicts of interest. 2. Consulting relevant company policies and codes of conduct. 3. Disclosing the conflict to the appropriate authority. 4. Seeking guidance on how to manage or recuse oneself from the situation. 5. Documenting all actions taken. This structured approach ensures that decisions are made with integrity and in accordance with established standards. Question 15. When evaluating a candidate for a critical role at Jubilant FoodWorks and discovering a minor discrepancy in their provided employment history that could be explained by a simple administrative error, which of the following decision-making approaches best aligns with the Jubilant FoodWorks hiring assessment tests regulatory framework and ethical guidelines? Option A. Immediately disqualify the candidate due to the discrepancy, prioritizing absolute certainty and avoiding any potential risk. Option B. Conduct a thorough and objective investigation into the discrepancy, seeking clarification from the candidate and verifying information through appropriate channels, while considering the candidate's overall profile and the nature of the discrepancy. Option C. Delay the hiring decision indefinitely until all possible historical employment records can be independently verified, regardless of the discrepancy's significance or the candidate's suitability. Option D. Proceed with hiring the candidate without further investigation, assuming the discrepancy is a minor oversight and focusing on their otherwise strong qualifications. The correct answer is A. Immediately disqualify the candidate due to the discrepancy, prioritizing absolute certainty and avoiding any potential risk. Explanation. This scenario presents a professional challenge because it requires balancing the immediate financial pressures of a business with the long-term ethical and regulatory obligations of responsible corporate conduct. Jubilant FoodWorks, like any publicly listed company, operates within a framework of laws and guidelines designed to ensure transparency, fairness, and investor protection. The decision-maker must navigate the temptation to prioritize short-term gains that might violate these principles, understanding that such actions can lead to severe reputational damage, legal penalties, and erosion of stakeholder trust. The correct approach involves a thorough and objective assessment of the situation, prioritizing adherence to the Jubilant FoodWorks hiring assessment tests, specific regulatory framework, and ethical guidelines. This means meticulously reviewing all available information, consulting relevant internal policies and external regulations, and seeking clarification from appropriate internal departments or legal counsel if ambiguity exists. The justification for this approach lies in its commitment to integrity, compliance, and due diligence, which are foundational to sustainable business operations and maintaining a positive corporate image. It upholds the principles of fair hiring practices and avoids any actions that could be construed as misleading or discriminatory, thereby protecting the company from legal repercussions and maintaining its reputation as a responsible employer. An incorrect approach would be to proceed with a decision based on incomplete information or personal bias, especially if it appears to offer a quick solution to a problem. This could involve overlooking potential red flags in a candidate's background or rushing the hiring process to meet an arbitrary deadline. Such actions risk violating the spirit and letter of hiring regulations, which often mandate fair and objective evaluation criteria. Another incorrect approach would be to prioritize the perceived immediate needs of the business over established procedures, such as circumventing standard background checks or interview protocols. This not only exposes Jubilant FoodWorks to the risk of hiring unsuitable candidates, but also undermines the integrity of the hiring process and could lead to claims of unfair treatment or discrimination. A third incorrect approach would be to make a decision based on external pressure or personal relationships without rigorous verification, which can lead to compromised judgment and potential ethical breaches. Professionals should employ a structured decision-making framework that emphasizes information gathering, objective analysis, consultation, and adherence to established policies and regulations. This framework involves identifying the core issue, gathering all relevant facts, assessing potential risks and benefits of different courses of action, consulting with stakeholders or experts as needed, and making a decision that is both compliant and ethically sound. Question 16. Market research demonstrates that Jubilant FoodWorks has identified a significant operational inefficiency in its supply chain that could potentially impact its quarterly earnings by 5-7%. The management team is discussing potential solutions and their financial implications internally. Which of the following approaches best aligns with the regulatory framework governing listed entities in India, specifically concerning material information disclosure? Option A. Continue internal discussions and implement solutions without immediate public disclosure, as the impact is still being quantified and solutions are being explored. Option B. Immediately disclose the identified operational inefficiency and its potential impact on earnings to the stock exchanges and the public, while continuing to refine solutions internally. Option C. Inform key institutional investors and analysts about the operational inefficiency and potential impact before making a public announcement to gauge their reactions. Option D. Wait until the end of the quarter to include the impact of the operational inefficiency in the regular financial reporting, assuming the solutions will mitigate most of the impact. The correct answer is A. Continue internal discussions and implement solutions without immediate public disclosure, as the impact is still being quantified and solutions are being explored. Explanation. This scenario is professionally challenging because Jubilant FoodWorks, as a publicly listed company, must navigate the delicate balance between responding to market dynamics and adhering to strict disclosure regulations. The pressure to act quickly on potentially market-moving information, while simultaneously ensuring compliance with the Securities and Exchange Board of India (SEBI) regulations, requires a robust decision-making framework. The core challenge lies in determining when information becomes material, and thus necessitates immediate public disclosure, and how to manage internal discussions and actions prior to such disclosure to avoid insider trading or selective disclosure. The correct approach involves a systematic evaluation of the information's potential impact on the share price, and a commitment to timely and accurate disclosure as mandated by SEBI listing obligations and disclosure requirements, LODR, regulations. This approach prioritizes transparency and fairness to all investors, preventing any information asymmetry that could disadvantage the general investing public. Specifically, the decision to disclose should be based on whether a reasonable investor would consider the information important in making an investment decision. An incorrect approach would be to delay disclosure of the information, even if it is potentially material, due to internal deliberations or a desire to gauge market reaction first. This failure to adhere to the principle of immediate disclosure of material events, as stipulated by SEBI LODR, can lead to accusations of selective disclosure or market manipulation. Another incorrect approach would be to disclose the information only to a select group of stakeholders before a public announcement. This constitutes selective disclosure, a serious violation of SEBI regulations designed to ensure a level playing field for all investors. Finally, an approach that dismisses the information as insignificant without a proper assessment of its potential market impact is also flawed, as it risks overlooking material developments that could affect investor decisions and the company's reputation. Professionals should employ a decision-making framework that includes 1. Information assessment. Rigorously evaluate the nature and potential impact of the information. 2. Regulatory compliance check. Consult SEBI LODR and internal policies to determine disclosure obligations. 3. Legal and compliance consultation. Seek advice from legal and compliance teams to ensure adherence to regulations. 4. Disclosure strategy. Plan for timely, accurate, and simultaneous disclosure to all stakeholders. 5. Internal controls. Implement measures to prevent selective disclosure or insider trading. Question 17. Analysis of a situation at Jubilant FoodWorks where a hiring manager is under pressure to fill a critical role quickly. A promising candidate has been interviewed, but the manager has a slight reservation based on a perceived lack of enthusiasm, despite the candidate meeting all technical qualifications and having a strong resume. The manager is considering recommending the candidate for hire to meet the deadline, but wants to ensure the decision aligns with best practices for Jubilant FoodWorks. Which approach best reflects professional decision-making in this scenario? Option A. Decline to recommend the candidate and restart the search immediately to find someone without any reservations, even if it delays filling the role further. Option B. Conduct a follow-up interview or request additional references specifically to address the perceived lack of enthusiasm, documenting the findings before making a final recommendation. Option C. Proceed with the hiring recommendation, prioritizing the immediate need to fill the role and assuming the reservation is minor and can be managed post-hire. Option D. Hire the candidate based on the manager's gut feeling that they will perform well despite the reservation to avoid further delays. The correct answer is C. Proceed with the hiring recommendation, prioritizing the immediate need to fill the role and assuming the reservation is minor and can be managed post-hire. Explanation. This scenario presents a professional challenge for a Jubilant FoodWorks employee because it requires balancing the company's immediate financial interests with its long-term ethical and regulatory obligations. The pressure to meet targets can lead to overlooking potential compliance issues, creating a conflict between performance and integrity. Careful judgment is required to ensure that any decision made is not only commercially sound, but also adheres strictly to the Jubilant FoodWorks hiring assessment test's specified regulatory framework, which is assumed to be Indian law and relevant company policies for this assessment. The correct approach involves a thorough review of the candidate's qualifications against the defined job requirement and the company's hiring policies, prioritizing objective assessment over subjective impressions or external pressures. This aligns with principles of fair employment practices and avoids any potential for discrimination or bias, which are often regulated by labor laws and company codes of conduct. Specifically, it upholds the integrity of the hiring process, ensuring that decisions are defensible and contribute to building a competent and diverse workforce, which is a key objective for any reputable organization like Jubilant FoodWorks. An incorrect approach that relies solely on a gut feeling or personal preference, without documented justification or adherence to established criteria, fails to meet professional standards. This can lead to arbitrary hiring decisions, potentially violating principles of natural justice and fair treatment of candidates. Furthermore, it opens the door to unconscious bias, which can result in discriminatory hiring practices, a serious ethical and legal failing. Another incorrect approach, which prioritizes filling the position quickly at the expense of thorough vetting, risks hiring unqualified individuals. This not only impacts team performance and productivity, but also exposes Jubilant FoodWorks to potential liabilities if the hired individual fails to meet job requirements or engages in misconduct. It bypasses the due diligence expected in any hiring process, undermining the credibility of the assessment. Professionals should employ a structured decision-making framework that begins with clearly understanding the requirements of the role and the established hiring criteria. This framework should include objective evaluation methods, documentation of the assessment process, and consideration of all relevant policies and regulations. When faced with conflicting pressures, such as meeting hiring deadlines versus ensuring candidate suitability, professionals must escalate concerns to their superiors or HR department to seek guidance and ensure compliance, rather than making unilateral decisions that could compromise ethical or regulatory standards. Question 18. System analysis indicates that a Jubilant FoodWorks procurement manager is responsible for overseeing the selection of a new catering vendor for company events. The manager discovers that one of the most qualified and competitive vendors is owned by their sibling. The manager has not previously disclosed this familial relationship to Jubilant FoodWorks. What is the most appropriate course of action for the procurement manager to take? Option A. Inform their sibling about the vendor selection process and advise them on how to strengthen their bid to ensure they are considered favorably. Option B. Continue with the vendor selection process as planned, assuming that their objectivity will not be compromised by the familial connection. Option C. Immediately disclose the familial relationship to their direct supervisor and the compliance department, and recuse themselves from all aspects of the vendor selection process. Option D. Proceed with the vendor selection process, subtly advocating for their sibling's company based on its merits, but without explicitly mentioning the relationship. The correct answer is C. Immediately disclose the familial relationship to their direct supervisor and the compliance department, and recuse themselves from all aspects of the vendor selection process. Explanation. Scenario analysis. This scenario presents a professional challenge for a Jubilant FoodWorks employee regarding potential conflicts of interest. The core difficulty lies in balancing personal relationships with professional obligations and ensuring that company resources and decision-making processes are not compromised by undue influence. Adherence to Jubilant FoodWorks' internal policies and relevant Indian corporate governance principles is paramount to maintaining ethical standards and preventing reputational damage. Correct approach analysis. The correct approach involves transparently disclosing the relationship to the appropriate authority within Jubilant FoodWorks and recusing oneself from any decision-making processes that could directly or indirectly benefit the relative. This aligns with the principles of good corporate governance and ethical conduct expected of employees in India. Jubilant FoodWorks' internal code of conduct, which likely mirrors standard corporate ethics, would mandate such disclosure and recusal to prevent conflicts of interest. This proactive measure ensures fairness, impartiality, and protects the company from allegations of favoritism or impropriety. Incorrect approaches analysis. Failing to disclose the relationship and continuing to participate in the vendor selection process is a direct violation of conflict of interest policies. This could lead to decisions being made based on personal bias rather than merit, potentially resulting in suboptimal vendor selection for Jubilant FoodWorks and financial detriment to the company. Ethically, it represents a breach of trust and fiduciary duty. Attempting to subtly influence the decision in favor of the relative, even without direct involvement in the final selection, is also unethical and potentially illegal. This constitutes an abuse of position and can undermine the integrity of the procurement process. It also exposes Jubilant FoodWorks to risks associated with engaging vendors based on personal connections rather than objective criteria. Ignoring the situation and hoping it goes unnoticed is professionally irresponsible. It demonstrates a lack of integrity and a disregard for established company policies and ethical standards. Such inaction can have severe consequences for both the employee and the company if discovered, leading to disciplinary action and reputational damage. Professional reasoning. Professionals at Jubilant FoodWorks should employ a decision-making framework that prioritizes transparency, integrity, and adherence to company policy. When faced with a potential conflict of interest, the immediate steps should be: 1. Identify the potential conflict. 2. Consult relevant company policies, e.g., Code of Conduct, Conflict of Interest Policy. 3. Disclose the conflict to the designated authority, e.g., HR, Direct Manager, Compliance Officer. 4. Seek guidance on appropriate actions, which typically includes recusal from decision-making. This structured approach ensures that all actions are compliant, ethical, and protect the interests of Jubilant FoodWorks. Question 19. The monitoring system demonstrates a potential breach of Jubilant FoodWorks' internal policy by a specific employee. What is the most appropriate next step to ensure a fair and compliant resolution? Option A. Conduct a thorough, documented investigation, gathering all relevant evidence and providing the employee an opportunity to respond before making any decisions. Option B. Ignore the alert to avoid potential employee dissatisfaction and operational disruption. Option C. Conduct a brief, informal conversation with the employee to gauge their reaction without formal documentation. Option D. Initiate immediate disciplinary action against the employee based on the system alert. The correct answer is D. Initiate immediate disciplinary action against the employee based on the system alert. Explanation. This scenario presents a professional challenge because it requires balancing operational efficiency with adherence to regulatory compliance and ethical conduct within Jubilant FoodWorks. The core tension lies in identifying and responding to potential noncompliance without causing undue disruption or unfairly penalizing employees. Careful judgment is required to ensure that investigations are thorough, fair, and proportionate, while also safeguarding the company's reputation and legal standing. The correct approach involves a structured, evidence-based investigation that prioritizes factual accuracy and due process. This aligns with the principles of good corporate governance and the implied regulatory expectation for companies to have robust internal controls and fair disciplinary procedures. Specifically, it requires gathering all relevant information, consulting with appropriate internal stakeholders, such as HR and legal, and providing the employee with an opportunity to respond before any conclusions are drawn or actions are taken. This upholds principles of natural justice and ensures that decisions are not arbitrary. An incorrect approach that involves immediate disciplinary action based solely on the initial alert, without further investigation, fails to meet the standards of fairness and due diligence. This could lead to wrongful termination or other sanctions, exposing Jubilant FoodWorks to legal challenges and reputational damage. It bypasses the fundamental requirement to establish facts and provide the accused with a chance to explain their actions, which is a cornerstone of ethical employment practices and often a requirement under employment law. Another incorrect approach, which is to ignore the alert due to potential disruption, represents a failure of oversight and a dereliction of duty. This could allow a pattern of noncompliance to continue, potentially escalating into a more significant issue that could have severe regulatory or financial consequences for Jubilant FoodWorks. It demonstrates a lack of commitment to maintaining a compliant and ethical operating environment. A third incorrect approach, which is to conduct a superficial inquiry without proper documentation or consultation, also falls short. While it may appear to address the issue, it lacks the rigor necessary to ensure a fair outcome and to provide a defensible record if challenged. This can lead to inconsistent application of policies and a perception of unfairness among employees. The professional decision-making process for similar situations should involve a framework that prioritizes: 1. Fact-finding, gathering all relevant evidence objectively. 2. Consultation, Seeking advice from relevant departments, HR, legal, compliance, to understand policy and regulatory implications. 3. Due process. Ensuring the employee has an opportunity to be heard and respond to allegations. 4. Proportionality. Ensuring any action taken is commensurate with the findings. 5. Documentation. Maintaining a clear and comprehensive record of the entire process. Question 20. Research into a potential acquisition by Jubilant FoodWorks has revealed non-public information about a significant strategic partnership that is expected to positively impact the company's stock price. An employee, privy to this information, is considering purchasing shares in Jubilant FoodWorks for their personal investment portfolio before the news is publicly announced. Which of the following represents the most appropriate course of action for this employee? Option A. Discuss the information and investment idea with a trusted colleague to gauge their opinion before making a decision. Option B. Consult with the company's compliance department or legal counsel to understand the implications of the information and the proposed investment. Option C. Wait for the news to be publicly announced and then make the investment decision. Option D. Immediately purchase shares, as the information is likely to lead to a profitable outcome for the company and the employee. The correct answer is D. Immediately purchase shares, as the information is likely to lead to a profitable outcome for the company and the employee. Explanation. This scenario presents a professional challenge for a Jubilant FoodWorks employee due to the potential conflict between personal financial interests and the company's ethical standards and regulatory obligations. The core difficulty lies in navigating the line between permissible personal investments and actions that could be construed as insider trading or a breach of fiduciary duty. Careful judgment is required to ensure that personal financial decisions do not compromise the integrity of the company's operations or violate securities laws. The correct approach involves proactively seeking clarification from the appropriate internal authority, such as the compliance department or legal counsel, before engaging in the proposed investment. This demonstrates a commitment to upholding Jubilant FoodWorks policies and adhering to regulatory frameworks. Specifically, this aligns with the principles of good corporate governance and the ethical duty of employees to act in the best interests of the company and its shareholders. By seeking guidance, the employee is actively preventing potential violations of insider trading regulations, which prohibit trading on material non-public information. This proactive stance also reinforces a culture of compliance within the organization. An incorrect approach would be to proceed with the investment without seeking clarification. This carries significant regulatory and ethical risks. Firstly, it could lead to a violation of insider trading laws if the information about the potential acquisition is indeed material and non-public. Such violations can result in severe penalties for both the individual and the company, including fines and reputational damage. Ethically, it represents a failure to act with integrity and a disregard for the trust placed in the employee by Jubilant FoodWorks. Another incorrect approach would be to rely on informal advice from a colleague. This is professionally unacceptable because it bypasses established compliance procedures and lacks the authority to provide definitive guidance on regulatory matters. Informal advice does not absolve the employee of responsibility for potential violations. Professionals should employ a decision-making framework that prioritizes transparency, adherence to policy, and seeking expert advice when faced with potential conflicts of interest or regulatory ambiguity. This framework typically involves 1. Identifying the potential issue and its implications. 2. Consulting relevant company policies and codes of conduct. 3. Seeking guidance from designated compliance or legal personnel. 4. Documenting the advice received and the decision made. 5. Acting in accordance with the guidance provided.